Hi guys, and welcome back to a new episode on learning how to trade. Last week we looked at the basics of trading, but today we're going to look at a basic strategy called the Bollinger Band strategy. There's a lot of different setups for this, but for all you new traders, I'm going to keep this very simple. If you're on TradingView, which is a site that I recommended that you use, setting up a Bollinger Band is really easy. You move up to here to indicators and you just search for Bollinger Band. We're gonna edit it a little bit, but to keep it simple, I'm just gonna leave it at mostly the default. The length can be, there's a lot of different lengths that you can use, but I think the most common ones are 20 and 50. For this example, I'm going to use 20, but personally, I use the 50 period length. The standard deviations are also very important because the more standard deviations that the price crosses, the stronger that the signal is. And I'll get more into that later in the video. For this example, we're going to leave it at 2. Okay, now let's look at how a trader would use the Bollinger Band strategy to trade. What generally will happen is the price will be up here, and it will cross up underneath this band right here. You don't want to buy it just yet, because what could happen is, for another example, the price could be up here and it could drop, cross under, and like I said before, the green line, the bottom band, represents the underbought section. So you might think that if it's underbought, it's bound to jump back up. But no, what could happen is it could simply ride the bands like this and continue to fall down like this, resulting in a big loss. You don't want to fall into that trap. So instead, you don't buy it when it crosses when it crosses below the lower band for the first time. You buy it on the way back up. So you would buy it right about here. You would buy it, and then you can sell it. You wouldn't sell it as soon as it crosses either this line or this line. For this example, we're going to use the top line. You wouldn't buy it the first time it crosses. You wouldn't buy it there because for all you know, it could continue all the way up this way, resulting in another big breakout. So you don't want to sell it just yet. At the time you want to sell it is on the way down. Right here is when you want to sell it, because then you have confirmation that the band is in fact falling. That the price is in fact falling. So to reiterate, we would buy right here, and we would sell right here. And now, how much profit would that have been? Well, let's find out. Almost 15% profit. Okay. Okay, so now let's look at some real life examples. Now this right here is a good example of the traps not to fall into that I just explained. Here we can see that the price right here, the shadow crossed below the lower band multiple times, but it did not meet that did not meet any of the conditions, which is buy when the candle closes below the price, below the lower band. Here it did not close above the lower band, it simply crossed it. That's not enough. So here it closed below the lower band, which completes the first part of the equation right there, but it does not meet the second one, which is close above the lower band. So it closed right here, did not close above it yet. You might have bought right here, it's just a matter of opinion, but I don't think that counts as crossing. So here again, it's already crossed below it, but we buy it on the way up, not on the way down. So here, this candle right here, I would not have considered it a buy because it doesn't look like it crossed to me. Now this candle right here, this one definitely closed well above it, above the lower band. So now this right here would be considered a buy. So we would have bought right here about. And now the sell condition is when the price closes above the top band, then closes below. I should say top band again. Hold on. To typo on my part. Okay. So now we have to wait until this condition is met. So right here you can see that the shadow crossed the top band, but it did not close above the top band. So that's not a sell signal yet. Okay, here we go. Right here we can see that the price crossed above the top band. It closed above it actually, and then so that completes the first part of the condition. Sell when the price closes above the top band, and then sell when the price closes below the top band. Okay, so this one closed below it, so this would have been a sell right here. So we would have bought about here and sold right there for a profit of 15%. Now unfortunately we did miss out on all this part right here. Oops, my bad. We did miss out on all this right here, but that's okay. As JP Morgan once said, I made millions getting out too early. You know, there's nothing we can do about this. We're not like fortune tellers, so you know, don't feel bad about missing out about that. Be glad that you made 15%. Let's look at another example. Yeah, this works right here. So here we can see that the candle once again closed below. Well, let's start over here when the first time it crossed. Right here, the price closed below the lower band, okay? But the second one, I wouldn't really consider that a close above the band. This one right here though, it does count. I would consider that a buy right here. And now unfortunately the price did fall below, but in this when doing this type of trading, I do recommend having a stop loss of, depending on your risk tolerance, between 2 to 6%. Personally, I use a 3% stop loss. So so for for just the simulation, let's find out where 3% would be. 3% would have been right about here. So that would have we would have taken a loss right here, right about here. But that's okay because we just made 15% on the last trade. So now we're up about 12%. Okay, so you know, we're down right there, but that's okay. Now here we can see that the candle closed below the band. Okay, so that meets the first part of our condition. Now this candle over here closed above it, so now that meets the second part of our condition. So this is a buy right here. We buy right here. Now we wait until the sell condition is met. So we wait. It hasn't crossed here yet. We wait, and then right here. Here we go. The price closed above the band. We would not sell yet. And here the price closed below the band. So you would have sold right here. Well, actually you would have sold in the next candle. So you probably would have sold somewhere around here. Now, how much profit would that have made? About 5%, somewhere around there. So there you go. That's 20% profit already in 2 trades. Alright, here we go, another example. Now the shadow definitely did cross, but the price, personally, I don't think that closed below it, so I would not have considered that a buy. Now this right here, I'm just gonna disregard that because I'm pretty sure that's just a glitch on Trading Views chart. So I don't, when the chart is like that, I don't look at it. I don't like take that into account. Here we go, another example right here. The price closed well below the band and then closed well above it. So this right here triggers a buy. And then we wait until our sell condition is met all the way up here. It crossed right here, but this right here I would not have considered that a sell signal yet. It crossed above it again. I would have sold probably right about here. So that's a profit of 7%. So now we're at, how much was it? 27%. 27% profit already in 3 trades. And then here we go, another one right here. Closed well below it, but it hasn't closed above the line yet, so we wouldn't have bought yet. This one's well below it, so we're still waiting for the candle to close above the lower band. So this right here, this candle right here meets our condition. So we would have bought right there. Now we gotta wait. Let's, for simulation's sake, put in a stop loss of 3% right above there. Right here. Oops. So right above, right about there. So obviously that would have triggered our stop loss. So now we're down to 24%. 24% profit. Okay, now here the candle closed below the lower band, which is our buy condition, but it's only half of it. Okay, now here this one, the shadow crossed, but it did not close above it. We would have bought on this one when it did finish above it. So here we go. We buy here, and now we have to find a sell condition. Oops, that was a mistake. Okay, we have to wait for a sell condition, which would have occurred on one of these. Let's find which one. Okay, so it crossed right here. Or actually, maybe you might even consider this a cross that. I don't know. Once again, it's all just a matter of opinion. But for this example, we'll use this one. So here it finished above it, which is half of the condition, and here it closed above it. So we saw somewhere around here. Profit of 3%. So that makes it for our last loss. So that's 27% right there. But you know, that's enough examples. You get the gist of it like this. But yeah, that's basically the Bollinger Band strategy. Maybe in a later video I'll go more in depth into using different strategies, you know, combining it with double tops, double bottoms, head and shoulders, all that stuff, and how to use it to judge like the strength of a pattern, kind of. Anyway, that's it for this video. I'll see you next time. Happy trading.